Those beeps are our cue. I'm Alexis, Madrigal. It's great to be back here in Aspen. It's been about 10 years I've been moderating panels here, and it's just great to be back post sort of trans-pandemic. Whatever period of the pandemic we're in, it's nice to be here with you all. I'm hosting the show Forum in San Francisco's NPR station, which is KQED, contributing writer at The Atlantic, and I've been covering science, technology, and health for, hard to believe, but 15 years now. Just to frame up the panel a little bit before we get going, of course, it's important to say that venture capital has a long history in the general health, medicine, biotechnology realm. I think a lot of people point to Genentech and their funding from Kleiner Perkins as this sort of crucial moment, both in the history of the health field, but also Silicon Valley and other things. So there's always been these pathways. But we are in a new era, largely, but maybe not exclusively, as a result of COVID-19, in which really big venture dollars are moving into other parts of this sort of broader health world. The good people at Rock Health sent me some figures just to kind of frame it up here on what they're calling digital health. Some people call it health tech. 2016, which I think is, living memory for most of us here at least. 350 deals representing about $5 billion went into what they're calling, digital health. In 2021, according to Rock Health, 736 deals representing $30 billion. So this is really kind of boom time, at least up through the end of last year. And of course, money's still flowing in traditional biotech too. Deal Room reported $40 billion in venture going to that realm in 2021. So to the title of this session, I just want to say I don't know if venture capital predicts the future exactly. It certainly predicts many futures, and some of those come to pass. And hopefully we'll get a chance to see some of the most promising ones here. As I intro our panel here, what I want you to do is after I intro you, you get to shout out one of your portfolio companies that you feel like represent your approach to this field as we go along here. Directly to my left, Julie Yu is a general partner at Andreessen Horowitz, where she leads investments in healthcare technology with a focus on companies modernizing how we access, pay for, and experience the healthcare system. She also was a builder and an operator. She was co-founder at the health tech firm Kairos, among other roles. And give us one of the companies you feel like represents
you're making me pick one. Hi, everyone. Great to be here. Thanks for the intro. I will just go with recency bias and pick Season Health, which was my most recent investment. Food is medicine play. Sounds like we have some fans in the crowd here. And what they do, and the reason it's representative of kind of how we invest, we look at tech platforms as a big part of how we evaluate the potential of the companies that we invest in. And Season is a platform company that enables any care delivery organization to insert a prescribed food program into their services mix. And they do that by way of both a virtual clinic where they can deliver nutrition services. They have a reimbursement engine that wires into reimbursement rails that exist for existing insurance companies, and then a food marketplace on the back end, which is, I like to sort of describe it as a super cart that enables you to shop across all of the food vendors. Imagine if you could merge DoorDash with Instacart, with Chef, with all of your different food vendors, and then overlay a tailored meal sort of algorithm to only show you the meals that are relevant to your particular health condition. Those are kind of the key pillars of their solution, and we led their Series A earlier this year.
That's awesome. To the left of Julie, we have Catherine Cooper, a partner at Jumpstart Nova, an early-stage healthcare venture investment fund. Also the founder of Health Tech DEI, which focuses on more inclusive investment strategies and solutions that optimize financial performance and capitalize on the wealth and diversity. Can you tell us one of your investments?
Thanks. Hi, guys. Excited to be here. And I'll second you on the whole VCs predicting the future. Glad I got butts in seats. Aggressive title, so I don't think any of us are wielding crystal balls. But I'll pick my most recent investment for Jumpstart Nova, which was into Allergy, and they're an end-to-end food allergy solution. So they span digital health, medical device, and consumer in terms of a consumer lifestyle app and connectivity. And it represents, I think, Jumpstart Nova as a fund. We back incredible Black healthcare founded companies, so Black founded and led companies at the seed and Series A stage. And Javier Evelyn, the CEO of that company, is fantastic. He has food allergies himself. And we look at healthcare innovation broadly, so that spans tech-enabled services, digital health, medical devices, biotech, healthcare IT, and anything that's essentially not life sciences or pharma. And so this is a great integration of all of that. And I have a special affinity for food allergy solutions because food allergies serve both pediatric and adult populations, and spanning both those is important to me personally. I used to run a pediatric medical device accelerator prior to joining Jumpstart as a partner. So I'm looking at kind of all healthcare and all people, not just adults.
Next, we have Nina Kelson, general partner with Canaan Ventures, investing in biopharma and digital health startups that serve high unmet needs. And what investment would you give us?
Well, I'll dig back a little bit longer. I've been doing this for 2.5 decades, so I've got a little bit of a well to dip into. But one of my proudest investments was a company called Labris. I like to think about investing in high unmet needs that address both patients, the needs of providers to offer their patients something really meaningful, but also something that serves the healthcare payer system and reduces costs and improves outcomes for the system as a whole. And Labris was a company that was serving highly refractory, severe, and chronic migraine, very large unserved population. Women suffer from migraines disproportionate to men. And this was a company that reduced chronic severe migraines from 14 to 15 a month to 1 to 2. It's given as a prophylactic, so it's more preventative than it is treating something that's severe and acute, and gives a durable protection. It's also something that's akin to our thesis, which is to try to invest in things that can show proof of principle pretty quickly on low dollars invested, and then that we can prove something that a pharma company might want to take on for later development and bringing to market. So it had about 25 million invested. It was acquired about 18 months into our investment thesis. And happily, the end of the game for us really is to bring things to market. I've been really glad to have about eight products approved in my tenure as an investor, and this is now launched and serving patients. So that's something that's very gratifying.
So as we get into this kind of the moment that we're in for investing of this kind, I just want to start like very basic. Julie, why is so much money flowing into this realm right now? Is it just the pandemic?
Well, we should frame up the right now versus the last 2 years. I think is probably going to be a part of this conversation.
Good point.
But
Good point.
certainly the last couple of years, absolutely. I think we should attribute a big portion of that to the great unlock, as we called it, that occurred during the pandemic. And it was a combination of, number one, just all of a sudden this spotlight being shown on how fragile our healthcare delivery system is and how much we relied on in-person human labor and all the operations that come with that. And that obviously drove a huge amount of the virtual care and digital health care delivery paradigm that we saw getting huge amounts of funding in the last couple of years. I think it was also commensurate, though, with finally seeing great companies go public and having line of sight to outcomes from a VC lens. And it was only in the last couple of years where we did see companies get to that scale and show that there is a path for that kind of liquidity event in the long run. So I would, amongst many other things, I would probably call out those two as the primary drivers. Actually, I'll add one more as another shout out to the Rock Health Group. They published their quarterly reports on funding, and I remember that one totally astounding fact from 2021, which is that 40 or 45% of digital health deals that got done last year were first-time funders into digital health, so had never before made any investments in the healthcare domain. And I think that's a testament to the fact that people saw the opportunity, maybe didn't have a long-term dedicated thesis in this space, but wanted to get in on the game. And I think we can talk later about the implications of that this year in terms of how that's going to play out. But that was also a huge contributor to the capital.
Yeah, Nina, when you hear that, that fact that so many people who don't really have a long track record in this space are getting into it, does that scare you a little bit that money is rushing in or was rushing in?
Well, I think you have to take a really, really big picture to look. And certainly we were in a moment where all of us were sitting at home, and there were a lot of things we weren't doing, and that's true for investors as well. There were a lot of sectors we weren't investing in. So there were huge capital inflows that weren't going into consumer, to retail, to travel. So there were inflows of capital that were unavailable into other sectors. So putting that aside. But then in a really big picture perspective, healthcare, whether it's healthcare services and health technology or whether it's biotech and life sciences, should be a massive part of our economy. It's an enormous employer. It is a future of technology driver of our economy. So it should be where a lot of of our dollars go. It's also a tremendous growth driver for labor and production, so it should be something that we pay a lot of attention to. And I think a spotlight shown on what science really can do for society in terms of getting us back to school, back to work, back in touch with our loved ones, whether it was the vaccines or the therapeutics or the distributed healthcare service providers that were done through telehealth. That being said, this stuff is really, really, really hard. These technologies are very, very complex, and they require a certain amount of realistic savvy and an understanding of that complexity and that capital intensity. So what I say is that enthusiasm should come to the table, absolutely, but we should marry it with that expertise and that rational and realistic understanding of the complexity. So I welcome the influx of investors that are new to the sector, but I hope it can partner really well with the expertise, whether it's operational, there's some really great operational expertise up here, as well as the investor sentiment that's been in the sector for much longer. I think it's a both and.
Yeah. Catherine, maybe we can talk a little bit about the range of things that kind of go into this general investing bucket, right? I think it's easy to imagine some of the things, right? It's easier to imagine biotech. It's been around. It's kind of a very established model. Kind of easy to imagine health apps on your phone. But just the examples that you gave from earlier, this is a very broad category, yeah?
Yeah, so I mean, if we're talking about healthcare innovation, it's extremely broad. So it spans, you look at pharma and biotech, right? We look at biotech, but we're looking at biotech platforms that can enable the building of solutions, but less, molecules. I don't have a PhD. This is not something that I can evaluate myself or my team. And to your point about domain expertise, that's required. You can't just jump in and say like, oh, I'm gonna, I don't know, learn all I can about drug X. That's maybe a little bit of a stretch. And so when I think of healthcare innovation broadly, I think we all have a goal, which is to create the future of better health for patients and individuals and society. But how we do that is in these different specialties. So I was very heavy in medical device prior, running an accelerator focused exclusively on that. And then, digital health or tech-enabled services or even healthcare IT are very different. I think you need to understand the drivers of how each of these sectors within healthcare innovation works. And then ultimately, the end users. And I don't just mean, patients or providers or hospitals, but the kind of nuances. And to your point of it being complex, like, who pays for this, like at the end? And if we can't get, payers on board, then you might just hit a roadblock, unless you're just a pure direct-to-consumer play. So I think we talk about healthcare as if it's one consistent system, but that's like saying, I invest in entertainment, and entertainment isn't just movies and television. It can include, video games or VR or all kinds of other things. Yeah, exactly.
And arguably the definition is expanding, right? I gave an example of a food as medicine company where food, just a decade ago probably wasn't considered anything that was core to clinical care, but now, all major payers have, some sort of reimbursement scheme for it. And I think increasingly we're going to see that get integrated into core medical spend in the same way that we see other sort of like wellness areas.
When you have this presentation, which you can go take a look at, about the new tech stack that you're talking about for digital health, can you talk us through that a little bit?
Yeah, it's actually, part of the tailwind here is that you now have this crop of thousands of digital health companies out there, all of which are, most of which are delivering some sort of care to patients in the same way that traditional medical clinics, used to in the kind of traditional brick and mortar setting. And so therefore, they all need kind of the same infrastructure, right? They need some sort of EHR type technology. They need some sort of revenue cycle type technology. They need some sort of patient-facing, capability. And the first crop of these companies in the last decade or so, they did either one of two things. They either licensed an off-the-shelf legacy EHR type tool and spent tons of time trying to customize it to make it work for a virtual first, value-based, patient-centric modality. Or they decided to build it from scratch, God bless those entrepreneurs, and spend all their venture capital money in the seed on building this core infrastructure. And so as we saw this, and we saw literally thousands of companies pitch us kind of this stack, we said, gosh, there must be an opportunity now for someone to come in and actually build purpose-built solutions for, again, these virtual first, value-based, patient-centric companies. And so we have started to see that in the last couple of years. There's now the next generation of They don't like to call themselves EHRs, but effectively what they're doing is producing a much more modern version of what Epic and Cerner and Athena and Allscripts and all those players did over the last several decades, and start to sell initially to digital health companies, but with line of sight to how it could eventually insert itself back into the traditional healthcare chassis. So there's, I think our blog post had roughly about 12 different categories where we're seeing this phenomenon play out, and it includes things like pharmacy operations, right? So like the Truepills of the world, who are not just selling software, but actually selling tech-enabled services that enable other companies to turnkey insert new service lines into their business model. So that's one of our big theses that we've invested against.
Yeah.
And there's an analogy to that also in the modern biopharma company. And I would probably add within the digital health company, there's also the incorporation of the social determinants of health and how you will address those. How will you address social work, transportation, et cetera, in the delivery of your care model, whether it's a virtual predominantly or whether there's an in-person element. And similarly, I think when you're building a biopharma company today, you have to consider that you're going to have a bioinformatics component. You're going to have a computational forward piece. No matter how traditional your drug discovery element is, it will be a data-intensive play. You're also likely to have an intergenerational workforce, and so how you build culture, how you build your HR and your benefits considerations, how you even build your physical infrastructure is going to look very differently than how we were building companies in the late 90s and early 2000s. Your physical plant looks different. And so these things are evolving, and there is a bit of a common playbook to that, and we shouldn't be reinventing the wheel each and every time we build a company. It's inefficient. We've seen that also in building cell and gene therapy companies, and this is maybe one of the areas where we get into our VCs, leaders or laggards. In some cases, we're definite leaders. In others, we're laggards. And we're forward-looking, but right now, a lot of my playbook is what's old is new again. We're looking at capital efficiency, and all of the individual companies and infrastructures that we built, we're now trying to figure out how do we consolidate to find economies of scale. But we've been doing a lot of kind of reinventing the wheel because cash was flowing amply and everybody wanted their own, and now we're figuring cash is scarce. How do we put it all together and share infrastructure and resources?
Catherine, do you want to talk a little bit about just Jumpstart's core thesis around backing Black founders and how you see that playing out?
Sure. So I'll give just some numbers to level set for everybody, although you may be familiar with some of these. So amongst venture capital, meaning funded companies by VCs, I think everybody's probably familiar with less than 2% of funding goes to female-founded companies, and then less than 1% goes to Black founders. And that was in, I believe, 2019. Project Diane had those numbers. And if you look at what's happened between 2019 and 2022, it's remained essentially unchanged. So we're talking about basis points going from 1 to 1.2. And then Crunchbase recently published an article, I think last week, that it looked like funding for Black founders was going up, at least in the beginning of this year as it was compared to last year, but it's actually drastically gone down. So we're now closer to the 1% than we were, inching to 1.2, 1.3. But I say from a population view or kind of a macro view, moving up basis points isn't really significant. What we're talking about is the difference of 99% of funding to 1%. Yeah. And so essentially most funding is going to all male or all white teams. And that's not any different for healthcare as it is across other sectors. So for Jumpstart Nova, we saw a unique opportunity with decades of chronic underinvestment in Black founded and led healthcare companies, and specifically within our sector as an opportunity to fund them exclusively. That is not to say at a $55 million fund funding seed and Series A companies that we are single-handedly going to fix this issue. Yeah. That shows a complete lack of understanding of how capital markets work and where we fall, in, let's say, compared to A16 or the other funds we have here on the panel. It is a drop in the bucket for our founders that will come out of Fund 1, which is 20 to 30 companies. However, having that direct focus allows Black founders to find us, and we thought this was a need in the market that we could address. We are very much a healthcare venture fund. We invest in Black founded and led companies, and that means we're healthcare first. So our limited partners span the healthcare industry, so they include Cardinal Health, Eli Lilly, Atrium Healthcare, payers and providers, because as our panelists said, healthcare is hard, and you need those kind of inroads to the industry to help these companies succeed. And so I hope there are more funds like Jumpstart Nova. There's Sia Ventures that focuses on women and BIPOC founders within healthcare. But even if we created thousands of funds like us, we still wouldn't solve that capital allocation problem. So we're here to bring awareness to that inequity and encourage other funds who don't have that specific thesis or focus to look at the diversity in their pipelines of funded founders and try to make adjustments of how they can kind of fix that over time, because we haven't gotten here by accident. This is hundreds of years of investing in terms of VC and the distribution of capital, and so we're just starting to recognize that issue, and Jumpstart Nova saw that as a unique market opportunity.
And these numbers are unconscionable in healthcare. They are unconscionable in healthcare because in healthcare, the workforce and the stewardship of the economic dollar, the decision makers in healthcare are overwhelmingly, and we're not talking about 30%, we're not talking about a simple majority, they are overwhelmingly stewarded by women and people of color. The decisions that are made about how a dollar is spent, what a choice is made about a route of care, and who is actually delivering that care, whether it's a physician, a nurse, a custodian in healthcare, is made by a woman or a Black or a brown person. So the fact that the dollars that are invested in the technologies and the services that are innovated are overwhelmingly 99% made by white men is unforgivable. These numbers have to change.
Yeah. And I think, as you said, healthcare makes up 18% of the GDP. So it's no surprise that it's an industry that VCs are prone to invest in, and lots of other people getting into the space over the last couple of years. And I also want to just make it very clear that it's not a pipeline issue. It's not a lack of founders in this space. They exist. They are just funded distinctly disproportionately. And so I kind of encourage everybody to reflect and think about that as you evaluate whether it's your deal flow or how you conduct your process, or who is in your own personal networks and how to expand those.
Yeah. One interesting thing, right? Your company also has offices like in Nashville and Los Angeles. I mean, some of it is, right? The concentration of the venture capital industry in particular places definitely leads people down particular roads of thought.
100%. So VC is traditionally on the coast. So East Coast, we have a Northern California person here. I'm in LA. We are based Jumpstart Health Investors as a platform. We have 3 funds. Jumpstart Nova is one of them. Jumpstart Foundry is our pre-seed fund, and then Jumpstart Capital focuses on seed and Series A founder with no particular diversity lens. Nashville is very much a healthcare city. Healthcare drives Nashville, and so that's a fantastic place for us to be based. I'm the first outside partner outside of Nashville. My network is very West Coast heavy, and we're just trying to kind of add folks in other areas of the country because we don't have a geographic focus in terms of the founders we look for. They can come from anywhere. We're just looking at US-based companies with US-based solutions. And so I think there is value in VCs not only being placed where founders can find them, whether that's the Midwest, the South, et cetera, but also having a very open process. So I think what was very beneficial about the pandemic and the fact that we were all trapped at home and had to learn whether it's Zoom, Google Meet, or FaceTime.
No, Teams. Everyone loves Teams, no?
Oh, yeah. No.
No, people don't love Teams?
Sorry if you're Team Microsoft.
Crickets.
But it's just, the login process is just not.
That's actually, I think, a really good point. I think that as sexy as the idea was, the sort of the Peter Thiel, and not to unnaturally pick on Peter Thiel, but the whole notion of the founder dropping out of college or graduate school to found a company and being all in, that's a very privileged thing to be able to do. If you are a first gen in your family to go to college, particularly if you're low income or if you're a person of color, that's a really big thing to forgo. And so shifting the mindset about saying, hey, maybe you don't have to drop out to start your company. Maybe you can put infrastructure around that really bright founder and say, let's see you through college or see you through grad school and still support you as a founder, or bring the company to you rather than have you have to come to Y Combinator in Silicon Valley to be a founder. It's a mindset that I think we can support shifting.
Yeah, the fact that accelerators turn to a virtual format was fantastic for folks who are based in different places. I think you're speaking to kind of what does a founder look like, and the fact is the founder looks like anything, And so having a specific archetype in mind, I think is sometimes misleading and focuses you on things that may or may not actually be very important. But to my point about us all being trapped on whatever virtual platform you want to just see heads up on, that allowed you to connect with folks in different places where you wouldn't normally be. You could, for better or worse, stack your day with tons and tons of meetings because you didn't have to travel within your city or get on a plane or find parking or all these other little things that really expanded that diversity. And we've kept that for Jumpstart Nova. We don't require founders to meet with us in person. I would love to see them, and there are many founders that we've connected with that I'm seeing for the first time here, and it's been fantastic. I get to see their entire body, not just their head. And you kind of think about what that does in terms of the deals that you see. From a VC perspective, that's only broadening our horizon in wanting to pick the best deals for our fund and our alignment. And so I just think that some of the things in the pandemic have carried over, which are positive to the venture capital and founder relationship.
Yeah. The thing that's on lots of people's minds right now is just sort of the market turmoil in general. Certainly, like in the tech world of VC, it seems like things are really changing and tightening up. Can you just address it? We'll start with Julie. What's going on for you right now as you're sort of looking out at the chaos out there?
Yeah, I mean, for us as a firm, so we're a multi-stage, multi-sector fund firm, and there's a lot of cognitive dissonance. Like it's not a single monolithic take by any means, as if anyone's in the VC Twitter sphere, might be led to believe. But for instance, I think certainly if you're a growth enterprise tech investor, you're probably pretty pencils down these days. However, on the seed stage side of healthcare, I was telling some folks earlier, like I got to fly back early tomorrow because I have a bunch of deals coming in. So it's still very robust, kind of on the early stage side of things. Even within healthcare, I have a lot of companies that sell to payers, which are having a very different experience than those who sell to providers, than those who sell to employers, right? So there's just a ton of nuance, I would say, depending on the specific nature of both the segment that you're in and the stage that you're in. No doubt, though, at just kind of the overall macro lens, like things are going to be slow and tough this year. For companies in general, people are holding back. People are, changing strategies. I think probably one of the most notable, shifts that, was a huge contributor to some of those explosive numbers that we saw last year was, many of the crossovers and hedge funds, sort of coming into the private markets and trying to get ahead of some of the valuations that we were seeing in the public sphere. That is absolutely drying up. And, this is where, to Nina's point, sort of the notion of durable capital becomes very important. And, unfortunately, I think a lot of founders have learned the hard way that you really have to care about the quality of the partner and the investor that you take on at any given point in time. And so, I think that's the nature of the beast right now is we're having, and that was kind of the approach that we used as a firm was we're not going to put out some, again, monolithic blog post about, how to interpret the world. We're going to have very tailored conversations with each one of our companies because, each one is truly, truly very different. So we're trying to take a very personalized approach to the whole thing.
Did you want to? I feel like in biotech, I think of that as being this more patient money over time, where maybe something like this, you're kind of prepared to ride this out.
I think historically that's been true, but I think what Julie points out is we had a lot of public investors, hedge fund investors, and growth crossover investors that migrated earlier. 2/3 of the IPOs over the last 5 years were preclinical platform companies that were doing drug discovery that had long timelines before they would have a first drug in humans. And that brought a lot of attention and a lot of capital into the early stage game. And those folks are now gone. And so those are companies that have very large burn rates, are obliged because they were not doing just a single program, but many programs that are now facing the need to really rationalize and prioritize. And that's difficult to do because the only way that you rationalize and prioritize those companies is to reduce the number of things you're working on, and that means reducing the number of people you employ. And that's a very painful thing as humans. And possibly combine or consolidate. But when you're a passionate founder and an executive team thinking about, combining with your competitor or your peer, It's a very big sort of head game to do that, no matter how much we as investors might sit and say that makes all the sense in the world. That's your baby. So I think it's going to be some tougher times, and you're going to be focusing on companies that are closer to or in the clinic for new investments, ones that have very tangible milestones that are within 12, 18, 20, 24 months, and having a preference to invest in those. And the will of those later stage and public investors to bet on good science, because the science is extraordinary. That's the one thing that is a unifying theme. We have been in an explosive renaissance of drug discovery science, some of it aided by machine learning and computational tools, some of it just because of the pace of scientific output. It's more just a cash flow issue. They had so many redemptions pull out of their funds, so they simply don't have the cash to back up their will. Yeah. So it's going to be some tougher times.
I've seen over the years, like I think, green tech, like climate tech boom in, the late aughts and into the early 2010s. It's the one that really struck me as having the most damaging effects, because you had all this money come in, all this excitement, and then just like, boom, no climate bill gets passed and the money starts to flow back out. And it seemed to really actually set the industry back a bit. Do you worry about that, Julie, that may happen, or do you think
it's very different? I think I mean, this is in many years like this, like digital health specifically, is like 20 years in the making, and so I do think that there's been a lot of foundational rails laid down over the course of several decades that now gives people, sort of a basis on which to stand versus sort of a blip on the radar type of dynamic. So I think that's one thing, and listen, the healthcare system. I don't have to explain to this group that the healthcare system is what it is, and the sort of burning platform, sort of dynamic that we saw in the last couple of years of, hospitals are in the red right now, and they desperately need ways to, be able to get labor leverage and, reduce their administrative spend such that they can just stay above water. There are real urgent reasons why we need to continue to invest in high leverage technology solutions to change the way we're doing business. That's very tangible and has immediate ROI. So, I think that's the one piece that, that I believe is going to keep this industry going, is that we have real problems that we can solve today with the types of solutions that are now available on the market.
Yeah. But I think you asked a really good question about it from a regulatory exposure. I think from the clean tech, we had major policy swings that exposed a whole industry. We have a well-funded FDA, we have a well-funded NIH. I think where we as citizens can stand up and ensure that we continue to have good healthcare access are things like insisting on mental health parity, insisting on the PDUFA, the big FDA bill, was not refunded with any consideration for diversity and equity in clinical trials. That's something that we as citizens should stand for and say there should be more attention to diversity in clinical trials and the FDA reauthorization. Similarly, telehealth. We had some really great telehealth legislation that was permissive during COVID to increase access. That's something that's good for everybody to persist. We want that. That will help with labor shortages, because those labor shortages, I think, are going to continue to be a problem in terms of the healthcare workforce. So that's in the interest of the industry. We want that to stay. So if that reversed, that would be, I think, a problem for digital health. But signs are good for that.
So I know I said we weren't going to talk about predicting the future, but I do want you to do a little predictioneering here, a little futurology. Catherine, I'm going to start with you, and let's set the timeline at like 5 years from now. What's something you think will have happened, maybe unexpected, or that you expect that people here would like to know about?
Well, this is a very good question. I'm going to reflect on this before I speak. So I like to say that venture capitalists don't predict the future. In some ways, founders predict the future because they are hyper-focused on solving problems that either they have some personal connection to, have experience, et cetera. And they are like finding that crack in the healthcare system that needs to be, we might call it exploited from a capital allocation standpoint, but they call it problem solving, right? With the ultimate positive impact. And so what we're doing is looking at the alignment of our thesis, our fund, our partners, and the founders that are, solving that minutia or what seems like something that is very, very specific, and how can we as a venture capitalist entrepreneur alignment kind of really help them expand. So I think what you'll see in terms of, I guess, 5 years from now is some things that seem especially unique or almost like minutia becoming part of the norm. So I want to point out, culturally competent care. There are a lot of founders who are here at Aspen Health that have companies that touch on that in some regard. And that's looking at maybe a specific patient population or demographic and giving them care that's appropriate to them, that they feel comfortable, they feel welcomed by, et cetera, and they feel like it's going to serve their health. That's not to say that they couldn't receive healthcare from the general system, but they haven't felt that it's serving them well. But instead of those organizations or companies being very siloed and seeming as kind of one-offs or band-aids, I think it'll integrate into the healthcare system as a whole. And instead of this being a specific solution for, let's say, like everybody who has purple shoes, like this is the company for you. We serve everybody with purple shoes. They have a fantastic experience. Like, come to our clinic. It's going to be amazing. And then maybe hospitals will just start serving everybody with like all shoe colors. And the purple shoe people feel like they're having the best experience ever, or regardless of their shoe type, and they're just one of the other colors of shoes. And I don't say that to make light of the situation. I say that because we're seeing those founders solving very unique problems that are unique to them, but they're actually not unique to general patient populations, but they are chronically overlooked by the healthcare system as a whole. So this is both a hope and a prediction that will no longer be something that's different or new or unique and just, normal. Yeah. We've got all shoe colors, not just the purple shoe people.
All right, Julie, you're up next. 5-year horizon. And then we're going to have a Q&A right after we finish this.
I guess, like, specific to VC, I would say one thing that's perhaps like underappreciated is that when you look at the top, let's call it 5, venture capital firms that have the traditional sort of like Silicon Valley basis and invest in multiple sectors, there's actually, other than Andreessen Horowitz, very few, if any, that have a dedicated healthcare team. And so I would predict in the next 5 years that you will see a majority of tech funds actually have a dedicated, healthcare partner, at least, if not a dedicated fund, which, it goes back to, again, what we said earlier. It's just so necessary to have domain expertise to be able to pick, the things that are going to be viable, but also just the nature of how you need to support these founders and what they need to do to navigate the system and insert themselves in the right way and surround themselves with experts. That requires dedicated expertise on the firm side as well, and that's a lot of the reason why we decided to sort of build a dedicated fund for the bio and health space about 6 years ago, and now have dozens of people who are just entirely focused on this space. So I hope to see more dedicated capital to the digital health space.
Yeah.
I think following on to that, and I think I agree with actually both Catherine and Julie. I think as a follow-on to that, I think the advances in molecular simulation and analytical and compute power will double the molecular space available to drug disease targets.
And what will that mean in terms of just how many new drugs will be discovered? You're saying that will be twice as many new drugs will be discovered?
Twice as many new drug molecules outside of the current believed available small molecule and protein therapeutics will be available. So not including cellular therapeutics or vaccines there, but new hybrid molecules that aren't imagined available today.
That's super interesting. All right, it's your turn. There are mic runners. We're going to call people here. We're going to go right to that woman right there. And then, yes, you, yes. And then we're going to come right here, sir. And then we'll come over here.
Hi, I'm Stephanie Gravener. I want to echo something that Catherine said earlier because I was one of the companies in the Jumpstart Foundry cohort, which is the seed companies, when I was 9 months pregnant and wouldn't have been able to do that without the virtual environment. My question is, I think you guys talked about less than 2% of companies, female-founded companies, get seed-stage investment. But I'm just so impressed by you all on the panel. And can you talk a little bit more about diversity in the kind of investor pipeline and maybe how you got to where you are and maybe the outlook for changing diversity kind of amongst investors as well?
It's changing. Half of our team, I've never counted formally, but I think half of our partnership at Andreessen Horowitz, both in general and also specifically on our healthcare team, is 50% gender diverse. Whites are the minority on our team. So and it's not. I would say we obviously are conscious of it, but for us, I think it's a testament to the opportunity in the healthcare space. Specifically when you look at the, we tend to hire people who come from either scientific backgrounds or operating backgrounds, and so it sort of follows the fact that you are, as we said earlier, seeing more founders and operators, represented within our field specifically. We're sort of pulling from that same pool. So. I think again, it's I've been in kind of the VC-backed tech space for about almost 20 years at this point, and it's like every 5 years you lift your head up, and it keeps getting better and better. And I think it's we're starting to see that flywheel effect really take hold because people are being much more deliberate about it.
Yeah, it's taken a really concerted effort in the 22 years that I've been in it. It's been a dramatic change, but it's taken effort. It's taken a lot of sponsorship of other women. Women came into the industry, but we had an issue where there wasn't matriculation. There were a lot of women at the junior levels, but couldn't achieve the general partner sort of either check writing or the general partner influence level. And some of that was attrition due to family. Some of that was just not being able to break through the glass ceiling. And particularly in the last 10 years, there's been two significant efforts. There's been the Women in Private Equity Coalition that's really leaned in to change that. I think venture is stronger in representation than private equity and leveraged buyout. That's still very much a male-dominated segment. There was kind of a Me Too reckoning within venture capital. The group of women on tech in particular started something called All Raise. That was a recognition that until more women were in check writing influence, there wouldn't be more women that were funded. And that's now grown to be a pretty sizable organization. And within life sciences in particular, I and a couple other women started something called Woven, which is Women Who Venture, and that's both for women who are in venture capital and who are venture-backed, to try to create a very deliberate sisterhood, showing each other deal flow, helping to get each other onto boards of companies so that the room would be more representative and diverse.
Well, one, thank you. I'm glad that Jumpstart Foundry was a great experience and allowed you to participate. So I can talk to your first question, which was, I guess, how did we get here? And I'll hit the highlights. My whole career is healthcare is the thread, and then we eventually ended up here at Venture. But started my career at Stanford as an undergrad, majored in human biology, was pre-med. I went to 3 years of medical school at USC before deciding not to be a practicing clinician. What does one do with a Stanford degree and 3/4 of med school? I started working for health tech startups. Slowly from really nerdy, like clinical analyst type roles to strategy and biz dev. Liked that a lot better. I am a sucker for school, so I went back to USC and got an MBA, ran a med tech accelerator for a number of years, and then joined Marcus Whitney as a partner at Jumpstart Nova. That now sounds like a very classic VC story. I've also just given you like the nice story arc. There were like things in the middle where I didn't really know what was going on. And they also say, tons of VCs went to Stanford or Harvard or some, one of the other schools, and that's now me too. So I'm a walking statistic. But jokes aside, for Jumpstart Nova, it's just the two of us partners, so it's Marcus and myself. He's a Black male, I'm a Black woman. We are a Black partnership, 50-50 in terms of male and female, but we're still a small team. If you look at the venture industry overall, and I think this is a 2019 stat, I don't have the ones now, I think it was 6% of venture partners were women. And so while my panelists spoke to the numbers that are rising in the ranks, I think we still need to take that macro view and understand that there are still so few compared to the men. And so we have leaps and bounds to go to get to 50-50. I am thrilled to hear that your team is as representative as it is, and I think folks can look to that as an example of what matters. And you have made a very, very great point about, it's especially for venture, about check writing power. So when you're at the partnership level and you are writing the checks and deciding to fund those companies, liaising with your limited partners, that is, and I'm going to say kind of the pinnacle of the fund. It's fantastic to have more analysts, principals, associates, et cetera, but it's also very unlikely to move from those roles directly to a partnership role at your venture capital firm, depending on how your assets under management. So the bigger funds, that may be likely. A smaller fund, for example, like ours, it depends on how we grow. So I think it's some nuances of how VC works, and also supporting those folks entering into partnership roles who may not have been in venture before. You made a fantastic point that healthcare requires domain expertise. So you can take folks who have been legacy industry executives for decades and teach them the nuances of venture, because you can't be a healthcare VC without the domain expertise. So even if you were in finance forever, it's kind of hard to learn healthcare. And so I think that makes it a slightly more equitable playing field within our particular sector within venture, but we all have a ways to go.
All right. Let's come right here. I don't know where our mic is. Oh, yep, right there.
My name is Peter Rigby. I'm with an angel investing firm that focuses on women startups, raising capital and supporting them. And I'd say the majority of our investments are probably in women's health, whether it's technology, diagnostics, therapy, or devices. And so my question is like an evaluation, not evaluation, not valuation. So I probably look at, I don't know, hundreds every year. And I don't know if it's a bias I have or whatever, but when I see a company come in and it's just a real small handful of people in a lab in Brooklyn working on like the next greatest cure for some aspect of cancer, and I go, is this a red flag? Like maybe should we walk, because I don't see any affiliations, advisors, or even anything with like the major cancer centers. If I don't see a company that's not tied into or some aspect of, say, Sloan Kettering or MD Anderson or Dana-Farber.
Traditional institutions.
Yeah, I was like, is this really going to happen? Maybe it's something in between, but what are your thoughts on that?
Good question.
I can go. I think it depends on the stage in which you invest in. So you're an angel group. You're earlier than us. We're looking at seed and Series A, so we might expect some of those affiliations. But I'll put my accelerator hat on. I think the question at that angel stage is if they don't have those affiliations, can you help create those for them? Can you bubble around that team the infrastructure or connections they might need to succeed? Because maybe they are absolutely fantastic working in that lab in Brooklyn and they're on to the next cure for cancer X, but they don't have those connections to Sloan Kettering. So is there something that you can add to make that for them, to make that a fantastic company and opportunity? And if that answer is yes, fantastic. If the answer is no, maybe that's not the angel investment for you.
Yeah, and I think it boils down to also there's very different products in venture capital as well, and there's groups that are entirely focused on incubation, where they will license technologies out of academia on the merits of the science, and then invest in bringing the business folks and operations folks around that team to do exactly what was just described. So I think part of it also boils down to, if you're going to invest in those teams, make sure that you understand the perspective of the downstream investors who you might surface that to down the road, and kind of understand what the landscape looks like in that regard.
And it sounds like part of what you're asking is brand, and does Sloan Kettering or Dana-Farber bring a certain level of validation and brand? And I think it totally depends. It can also bring bias. What you're usually taking with brand equity is a proxy for quality assurance, and sometimes that's true, but are there other ways to get reassurance of that quality? In general, we find that sometimes data just doesn't replicate in the next set of hands, and so what you want is that reassurance, and a third-party CRO, a Charles River or a WuXi or a Jackson Labs, can repeat the experiment and give you that reassurance of validation, because genius can be found in lots of different places and doesn't have to come from a brand name institution.
I think that is all the time we have. I'm sorry we didn't get to more questions. One more round of applause for Julie Yu, Catherine Cooper, Nina Kelson.